We're going to talk about dilution versus accretion, MNAV premium justification, the debt to leverage ratio, and the threat or non-threat that quote unquote MSTR killers have, right? Dilution versus accretion. Take a look at this theoretical dilution. Company A has 10,000 shares, 1 Bitcoin per share, so they have 10,000 Bitcoin. After they dilute, they have 1.2 Bitcoin per share, which means they purchased 4,400 Bitcoin. That is a Bitcoin yield of 44%, which means the shareholder has increased their exposure to Bitcoin by 44% by holding. They've done nothing to gain this Bitcoin. They just held the stock. Let's listen to Michael Saylor explain.
So if hypothetically, Julian, if I had $100 of Bitcoin per share, and if my stock was trading at $100, then I could sell $1 billion of the stock and I could buy $1 billion of Bitcoin, but it would be completely neutral. There would be no accretion. That would be BTC yield equals 0. If my stock had $100 of Bitcoin per share in it and someone offered me, if they called me on the phone and said, hey, I'll give you $10 billion today if you sell me the stock at $50 a share, well, that's a negative BTC yield. That's dilutive. So you see, if I just wanted to raise money and buy Bitcoin, I could do it on a neutral basis or a dilutive basis. But we're not stupid, and our shareholders aren't stupid, and so you have to assume that if you're diluting your shareholders, they will lose their enthusiasm for buying your stock. So we don't do that, and we don't do transactions that are dilutive.
Shareholders gained a 74% Bitcoin yield in 2024 alone. That means in January, you had 258,000 less Bitcoin than you had in December. $14 billion worth of value creation for the shareholders, 38.5 million a day. Dilution, my ass. Excuse the language. Now, MNAV premium justification. Strategy issues convertible bonds to amplify their returns, especially in a bull market. They raise capital through these convertible bonds to buy more Bitcoin. These bonds act as a call option because bondholders can convert their shares into MSTR at the designated strike price at a future date. Investors pay a premium for the convenience, liquidity, and regulatory compliance because some convertible bond investors legally cannot get Bitcoin exposure through the convertible bond market. There's no other options, right? And MSTR stock volatility. MSTR stock is more volatile than Bitcoin due to its leverage and speculation. Tends to outperform in a rising bull market. And if you need proof, here we go. There's only one bond that's down. And this data is from February 4th, 2025, their Q4 2024 earnings call. But this data is from February 15th of this year. Right, so the best performing convert is the 2024 or the 2025 convert, which is 224%. The second best performing is 144%. The average blend of all these bonds, 75%. You're outperforming Bitcoin. Not only are you gaining Bitcoin exposure, you're outperforming Bitcoin. Okay, and if that doesn't deserve a premium, I don't know what does. The convenience and the service alone of providing Bitcoin to convertible bond investors, that alone deserves a premium. And the fact that you're outperforming Bitcoin, whatever. I haven't even begun to talk about the NASDAQ inclusion and how this accelerates strategies, Bitcoin strategy. As Bitcoin rises, strategies Bitcoin holdings appreciate, increasing its market cap. With a higher market cap, the NASDAQ weighting grows, attracting more passive investment. More passive investment means more index funds buying MSTR, driving up its stock price further. Stock gains, MSTR has more access to capital markets, able to borrow more easily at cheaper, I don't know how you can get cheaper than zero funding rates. Debt issuance, MSTR raises funds via convertible bonds and notes. They use those bonds and notes to buy more Bitcoin, strengthening MSTR's Bitcoin-backed value, restarting the cycle the next time Bitcoin rises. What is the premium on a company bridging the gap between Bitcoin and traditional corporate finance? Can you put a number on that? Or does it grow with time as Bitcoin grows? Next, the numbers speak for themselves. Do they not? 2,700% outperforming Bitcoin since August 10th, 2020, when Strategy adopted its Bitcoin strategy. Bitcoin is up 711%. The S&P is up 80%. I repeat, MSTR is up 2,000, probably 2,600% after this recent dip to 250. Right? The average bonds are down 20%. Down. Why does it deserve a premium? Why? It shouldn't have a premium. Right. Again, let's let Saylor explain it because he's definitely more succinct than I am.
We're the largest operating company that holds Bitcoin. So if you have $17 billion of capital of Bitcoin, that's permanent. So there's no redemption rights to that. There's ETFs like BlackRock or Fidelity that are comparable to us in size, but those are overnight deposits. So if you said, hey, I've got $17 billion in deposits, people can take the money out of the bank tomorrow. Well, they just basically are a trustee holding the money, and they return it when they're asked to return it. You can't leverage it, and you can't build businesses on top of it. MicroStrategy has permanent capital. So for example, we can do things like we can issue convertible bonds on top of that capital. So if you have, we have 16 to 17 billion in Bitcoin exposure. We have 4.2 billion in convertible bonds. The bonds we can issue fairly cheaply because we have a stock. The stock reflects the permanent capital of the Bitcoin, but that's not redeemable either. That means that it can generate a premium to the Bitcoin. So as people trade the stock and they trade the options on the stock trades at a premium to the asset value. And when the stock trades at a premium to the asset value, the company issues either equity or convertible bonds at a premium to the underlying assets. When we do that, we don't just put the money in the bank or in T-bills, we actually invest the money in Bitcoin. So you could imagine when the company issues, if we were to sell $1 billion of equity in the market and it's backed by 500 million of Bitcoin at 100% premium, then we buy the Bitcoin and 3 days later we've generated a $500 million gain for our shareholders in Bitcoin. So that's very interesting. That generates what we call a BTC yield. Now if we do the same thing with a bond, a $1 billion convertible bond, we don't do it at 100% premium, it might be a 200% premium because the bond comes at a premium to the stock. So when you go up 40% over a stock, which is 100%, now you're looking at something that looks like more like 180%. So now a $1 billion bond sold into the market's backed by $350 million of Bitcoin. We buy back the billion of Bitcoin, we capture the $650 million gain, another BTC yield. So the real operating business of the company isn't the software business anymore. I mean, that's still there. It generates 75 million in cash flow, but one of those bonds would generate 10 years worth of earnings in 5 days. And so really MicroStrategy is pioneering a new market. We're issuing securities backed by digital capital, backed by Bitcoin, and then we're buying the Bitcoin back. So what that means is I could issue the bond in 1 week, buy the Bitcoin, capture the $300, $400, $500 million gain, announce it to the market. The stock would trade up. I could do another bond the next week. A lot of times people say, well, why do people buy MicroStrategy instead of Bitcoin? Well, it's because it's literally illegal. They'll get fired if they buy the Bitcoin. They can't, right? Mm-hmm. And so people miss the obvious point. There are large pools of capital. If you're a venture capitalist, you got to invest in a company that offers you private equity. If you're a public market investor, you have to invest in a public company. If you're a commodities trader, you have to invest in commodities. If you're a convertible bond arbitrager, you have to invest in convertible bonds, right? That's literally what your job is. When you raise the capital to do that, they came with strings attached. Mm-hmm. The strings are you have to use it this way. If you break the rules, maybe I sue you, maybe I fire you, maybe you go to jail, maybe I take the capital back. And so the people in the crypto Twitter ecosystem, sometimes they don't really understand there's $500 trillion of capital and it's sitting in silos and the capital has to be deployed in a certain way.
2 MNAV premium justifiers. People, investors who legally cannot buy Bitcoin. And the flywheel. Not to mention outperformance of bonds, outperformance of Bitcoin. Next.
Coin a lot.
Debt, the debt to leverage ratios, right? I hear a lot about how MSTR is over leveraged. They could be going bankrupt with one more drop of Bitcoin and they go bankrupt. If Bitcoin hits $9,000, they go bankrupt. I fell victim of this because I didn't study. Okay, that's why I'm making this video. Okay, Strategy has $17 billion. Well, $15.1 billion now because they just did a 2.3 convertible bond this week. So February 25th, the week of February 25th, they announced a purchase of 2.3 billion using the convert. So fixed income is bonds and converts, and equity is at the money issuance. So the dilution, quote unquote, or the Bitcoin accretion, right? So those who think that MSTR is over leveraged, they don't know. They haven't seen anything yet. We're about 20% of the way through the fixed income that he has available. Not to mention the 100 billion authorized shares that got approved through the vote maybe a month or two ago. So if you think that we're leveraged now, we aren't. As of recording this video, Strategy has a total of 9.2 billion in debt with a total of 41 billion in Bitcoin value. So the debt to Bitcoin ratio is 22%, and their target leverage is 20 to 30%. So not over leveraged, okay? There's way more room for leverage, all right? And of course, let the master explain it himself.
A lot of people don't really think. They're like, oh my God, MicroStrategy is going to get liquidated at Bitcoin. It's like, well, dude, no, Bitcoin could go to $1 a Bitcoin. We're not getting liquidated. We're just going to buy all the Bitcoin if it goes to $1 a Bitcoin. Then it's going to go back up again. Right? But people just say things. They're like, well, I heard you have some leverage, and so therefore there must be a liquidation price.
There is no liquidation price. MSTR's first mover advantage, and why other companies adopting Bitcoin does not threaten MSTR. Strategy holds 10x more Bitcoin than any other corporate company, giving it market dominance in Bitcoin adoption. Lower risk versus miners and other stocks. Unlike miners, Mara and other miners are affected by halving cycles and hash rate competition. As the hash rate increases, they get less Bitcoin. And Semler Scientific is regulated by health associations. So that We all know how damning that can be. MSTR avoids these operational risks with a Bitcoin treasury strategy only. It's Bitcoin only. Institutional credibility. MSTR's enterprise software foundation provides stronger regulatory legitimacy compared to riskier mining stocks. And NASDAQ and passive inflows. MSTR is the only Bitcoin company in the NASDAQ, and its growing market cap leads to a higher NASDAQ weighting. Flywheel we just mentioned. And the corporate flywheel. As more companies adopt Bitcoin, it boosts demand and price, restarting the cycle, right? Because it starts with price going up, price goes up, stock price goes up. You can take out more leverage, issue more debt, buy more Bitcoin, Bitcoin goes up, stock price goes up. It's an endless cycle. So I hope you guys learned something. I hope you aren't feeling as much of the FUD as you were before. Make sure you check out. I will leave a link in the description for all my other social media accounts so you guys can get more alpha, more info. Because I know this ain't going to be enough. And I'm sorry for the break. I'm back. God damn it, I'm back.